This is the AI News Flash for May 28th, 7 a.m. UTC. First up, Bloomberg reports JD.com founder Liu Qiangdong publicly vowed to protect the e-commerce giant's 900,000-strong workforce from losing their jobs to AI and robotics automation. This marks a decisive moment as Chinese tech giants formally commit to worker protection amid growing AI displacement fears. Liu's social media post directly addressed mounting anxiety over AI replacing workers, signaling a fundamental shift in Chinese big tech labor commitments. This aligns with China's evolving AI strategy that balances technology promotion with employment protection concerns. While President Xi Jinping's 15th five-year plan positions AI technology, self-reliance as top priority, the Ministry of Human Resources policy document highlighting a 5 million AI talent shortage reveals contradictions between AI advancement and worker protection. JD.com's independent worker protection commitment establishes a decisive differentiation against U.S. tech industry's cumulative 158,000 AI-driven layoffs, marking 2026 as a critical turning point for Chinese AI labor policy. Second news, Fortune exclusive coverage of a large-scale Boston Consulting Group study reveals that adding AI employees to corporate ranks is producing counterintuitive negative effects across the workforce. This signals a decisive moment for enterprise AI agent implementation and organizational culture transformation. The new office scapegoat phenomenon is emerging rapidly, with human workers increasingly blaming all errors on AI agents while becoming sloppier and lazier due to over-reliance on AI partners. The BCG study reveals critical structural challenges where human workers managing multiple AI agents experience mental fatigue, slower decision-making, and brain-fly cognitive overload affecting 14% of users, with Gartner predicting 40% of enterprise applications will embed AI agents by end of 2026, and the Microsoft Copilot plus Agent 365, Salesforce Agentforce, and Google Agentspace Enterprise AI agent market accelerating. The trust balance between human workers and AI agents emerges as a fundamental challenge. Under hyperscaler, four-company combined $725 billion 2026 capex boom. This positions 2026 as a critical turning point for enterprise AI agent implementation. Third news, Bloomberg exclusive interview reveals AI startup DeepZero's successful IPO signals strong investor conviction in the AI industry's long-term trajectory. This marks a decisive moment for the AI industry IPO boom. DeepZero executives publicly emphasized that their IPO success validates strong belief in AI as institutional investors maintain valuations on AI-related companies amid the broader IPO market acceleration. This aligns with first quarter 2026 Hong Kong AI-related IPO reaching 5-year highs, with Zhipu AI 7 times oversubscribed, Minimax doubling on first trading day, and 27 Hong Kong AI IPO listings creating a surge. Against the backdrop of NVIDIA, OpenAI, and Anthropic approaching $1 trillion valuations and accelerating frontier model development, AI startups are now formally accessing capital markets at scale. Under hyperscaler four-company combined $725 billion 2026 capex boom, maintaining AI company valuations. Institutional investors are entering a serious selection phase, positioning 2026 as a critical milestone for the AI IPO market. Fourth news, market research firm Omdia released a comprehensive report formally declaring the AI factory market has entered its industrialization era, identifying 5 fundamental dynamics redefining AI infrastructure in 2026. This marks a decisive turning point as the AI factory market enters full industrialization phase. The 5 key dynamics include complete vertical integration of AI infrastructure layers, coexistence of NVIDIA GPU and custom silicon inference workload optimization, structural energy cost pressures, and full-scale enterprise AI agent market emergence. This aligns with the hyperscaler four-company combined $725 billion 2026 capex boom and the second phase AI infrastructure beneficiary stocks rotation, NVIDIA's GTC 2026 Feynman architecture with silicon photonics adoption, Vera Rubin GPU mass production acceleration, and TSMC's dominant manufacturing position provide the foundation. Samsung Electronics' $110 trillion $82 billion record annual investment, SK Hynix HBM4 mass production, and Micron's 245 terabyte SSD AI memory supercycle all support the industrialization era. This establishes 2026 as a critical turning point for AI infrastructure market industrialization. A fifth news, Bloomberg exclusively reports the Taiwan Stock Exchange announced major plans to extend trading hours and reform odd lot trading, marking a decisive moment for activating Taiwan's AI-related stock market. This represents a critical phase for expanding Taiwan AI stock market liquidity. The comprehensive market structure reform includes trading hours, extension, and odd lot trading reform with TSMC, Honhai, Quanta, and Compal at the core of Taiwan's AI supply chain undergoing full institutional reevaluation. Against the backdrop of MSCI Emerging Markets Index showing Taiwan at 21.06%, first overtaking China at 20.93%. Taiwan's strategic position in the AI supply chain is being reevaluated. The hyperscaler four-company $725 billion 2026 capex boom, AI server racks, AI semiconductor manufacturing, and HBM memory supply constraints align with Taiwan companies' AI-related borrowing reaching $145 billion record high. Combined with Global Fund Asian AI stock capital shifts, Taiwan's market liquidity expansion reforms accelerate institutional investor allocation strategies under U.S.-China AI geopolitical competition. This positions 2026 as a critical turning point for Taiwan's AI stock market. That's all for this AI news flash.